Hello traders, welcome to CIFX channel. Please subscribe to the channel, turn on the notification bell and share the video to support to grow the channel. So today we are looking at the break of lower lows and the break of higher highs strategy for synthetic indices. So traders, let's tune on to the real chart. On the real chart, we are looking for the break of the swing lows for this instance because the market is in a downtrend. So we are looking for selling opportunities. As you can see, if the market breaks the lows is looking to make a lower low. So at the retest of these lower lows that were previously broken, we are looking for sell trade opportunities. That is where we are looking for sales opportunities. On the other hand, you can look for an opportunity to sell at the break and you put your stop loss above the breakout candlestick. So that is the simpler way to approach these synthetic indices. You are looking to follow the trend that the market is giving you. You are looking for the break of lower lows and higher highs. By the way, we are looking for buying opportunities in an uptrend. We are looking for sales opportunities in a downtrend. We are looking to follow the trend as much as we can. We are looking to follow the trend. We are looking for the break of the higher highs. We are looking for the break of the higher highs and we are looking to buy after the break of the higher highs. That is the much simpler way to approach the synthetic indices, to go with the trend. So that is the more simple way to follow the trend of the synthetic indices. We look for a break of printed higher highs and lower lows. That is where we are looking to take trade. If the higher high is broken, we are looking for the buy opportunities. If the lower low is broken, we are looking for the sales opportunities. This is the lower low I'm talking about. The lower low I'm referring to. If the lower low is broken, we are looking for sales opportunities. If the lower low is broken, we are looking for sales opportunities. Same thing applies if the market is moving on an uptrend, is in an uptrend. We are looking for the break of the structures, the break of higher highs, and we are looking to take a trade at the break of the higher highs. That is the much more simpler way to follow the trend, the dominant trend, because some of the trends in synthetic indices, they quite move a lot. So it is simple to follow the trend rather than looking for reversals, which are sometimes will manipulate you. It's just to put your trend line, and I've put in this filter here, which is a moving average, a 50 period moving average, which shows me that the trend is down. It's slope to the downside, so that indicates the downtrend. So by that way, I'm looking for sales opportunities. I'm looking for the break of the lows. I'm looking for the break of the lows. In an uptrend, I'm looking for the break of the highs. This is an active market, as you can all see. This is my analysis. This is what I'm looking for. I keep each and everything simple. I just draw my structures and look for the break of the structures that I've drawn. That is the more simpler way to trade synthetic indices, which is VIX jump indices. So I'm looking to follow the trend. I'm looking to go where the market shows me it's going. I'm looking for the break of the swing highs and the swing lows, then I follow the trend. That much simpler way to approach these synthetic indices. In a downtrend, we are looking for selling opportunities, the break of the lows. We are looking for the lows, the break of the lows. We are looking for this. That is where we will be looking for the trade. Every time when the low is broken, we are looking for a sell opportunities. Every time when the high is broken, if the market is showing us that it's making higher highs and higher lows, that is where we'll be looking for buys opportunities. So that is the more simple way to follow the trend. Wherever the trend is going, we follow the trend. As day traders, we are looking for to follow the trend. The lower lows are broken, we are looking for the sales opportunities, but not forgetting our support and resistance. In the support structure, we are looking for a reversal. The simpler way to look for a reversal is for looking the M's. Those are M's I'm talking about. We are looking for M's and the break of the neckline. The break of a neckline, the break of a lower high. We are looking for that break in the reversal opportunities. That is what we are looking for. So it is much less simpler way to, especially for beginners. It is a more simpler way to look at the market if you are looking for the break of higher highs and the break of the lower highs. If the higher high is broken, we are looking for buy opportunities. If the lower low is broken, we are looking for sales opportunities. And there is a plenty of opportunities in this style of trading, because each and every time the market has to move, it will have to break a lower low or the higher high, unless the market is on a sideways phase. So we are not looking to trade the sideways market. We are looking to trade the market when it's trending. We are looking for the trades when the market is trending. We are looking to buy the break of the higher highs if the market is going up. So it is very important to insert the moving average on your chart. The moving average will show the direction of the market. To avoid taking the buy trade in a downtrend, to avoid taking sell trade in an uptrend, we are looking for the break of the lows in a downtrend. That is the simple way to approach the synthetic indices. Every time you look for the break of the lower low in a downtrend. In an uptrend, we are looking for the break of the higher high. Then we take our trade and we are following the trend. That is the more simpler way to follow the dominant trend. We are not fighting the trend, but we are looking to follow the trend. As you can see, you've got trades each and every time the market has to move, you follow where the market is moving to. So traders, please consider subscribing, and I will drop another video in the coming days for more in depth about the strategy and some of easy ways to identify swing lows and swing highs. So as the strategy is mostly based on those things, so I can make another video following, which is a follow-up video on the strategy. So the strategy is simpler. We are looking for the break of the lower lows and the break of the higher highs. As you can see, this is the break. This is the live market. We are looking for the break of the lower lows and higher lows. So guys, please support the channel. If you are looking for more content based on synthetic indices, even the foreign exchange market, I'm trading the foreign exchange market. I'm a trend trader. I'm looking to follow the trend. I'm not interested in reversals, and what I'm looking for the support to break, and I took a sell. I'm looking for the resistance to break. I'm looking for the buy opportunities. I'm looking to follow the trend. So it is very simple. It is a simple way of trading if you are following the trend. So thank you.